Let's talk about the pound and how the pound has reacted to this.
Well, I think it's a tale of two halves, really. The initial reaction to the decision was a positive one, a 9-0 unanimous vote. The market was going for perhaps 8-1 or 7-2. We were going for 7-2. And subsequent to that, we've seen, obviously, a pullback in sterling following the Carney comments. I don't think the Carney comments were really markedly dovish, but I think the emphasis here for us as a house is that the political risk premium on sterling now is likely to be the dominant factor. If Carney and the Bank of England are saying that we're taking small steps in policy tightening, that really takes off imminent near-term rate hikes off the table, and therefore the one thing that the market can anchor its views on as far as sterling is concerned is the forthcoming Brexit negotiations.
We'll talk about that, Kamal, because what Mark Carney said in his news conference was he thinks that the depreciation in the pound as a result of the referendum is largely behind us. Was he separating out what happens for the referendum as opposed to the actual Brexit?
I think so. I mean, you know, the referendum was a big I guess, sea change in the way that market trades sterling, largely because it was premised on the view that the post-referendum macroeconomic environment would be less conducive to growth. But in terms of what it means for kind of the post-Brexit outlook, I think the issue here is that everything rests on what the withdrawal agreement between the EU and the UK looks like. Is there going to be a transition? We do think that the lack of a transition, the potential for a cliff edge hard Brexit is quite significantly bearish for sterling. We think cable will go down towards the 110 area. So he's highlighting the concerns here that we've had the initial phases of the inflation push higher in terms of the referendum moving cable, but obviously further uncertainties lay ahead over the course of the next year or so.